This simple ICT power of 3 gold trading strategy is the easiest way to become profitable fast. Now, I've been trading for over 9 years, and what I've found is that when you overcomplicate your trading, that's when things don't work out for you. And when you keep things simple, that's when you start to see results. Now, you need to understand that 95% of the candles have a wick. And with that information, what we can do is use this specific power of 3 pattern that repeats itself every single day. Now, the reason why you're not profitable is because you don't have a repeatable system that you can use every single day. You come onto the charts without a plan and you use different strategies just for the sake of taking a trade, just so you can get that dopamine hit and see those blue numbers go up. But when that happens, when you take random trades, that's when you actually blow your accounts because you don't have a clear system. So without wasting any more time, let's get on with the video and I'm going to explain what I'm talking about. Alright guys, so here is the strategy. So we want to be trading the 10 a.m. 4-hour candle. Now this specifically works for gold futures and NQ futures. It doesn't work for CFDs because, on CFDs the timing is different. And we want to trade the 4-hour candle 10 a.m. power of 3. So over here we have this 10 a.m. 4-hour candle, right? But if you are a beginner, I want to explain what is power of 3. Right? Power of 3 is essentially when price accumulates orders or consolidates and then it manipulates, right? Liquidity sweep, and then we have a market structure shift, and this move is called distribution. So accumulation, manipulation, and then distribution. Now 95% of the candles have this pattern, and when a candle has a wick, it definitely manipulated and then expanded to the downside. So you can see this 10 a.m. 4-hour candle, right? We have a wick to the upside and then we closed as a bearish candle. So meaning we had manipulation around this area, right? And then we had distribution to the downside and we closed as a bearish candle. Now this is what it would look like on the lower time frame, right? And we want to be taking our entries on the 1 minute time frame. And this is how it goes, right? So first thing first, you want to mark out the 10 a.m. open. So as soon as the 10 a.m. candle opens on the 4-hour time frame, right, you can mark out the opening price. Then what you want to do is go onto the 5-minute or 15-minute time frame and mark out PD arrays on the 5 and 15-minute time frame, right? Now the PD array could be an auto block or it could be a fair value gap, right? So let's say there's a higher time frame PD array here on the 5-minute time frame. Now we have the 10 a.m. open, and as we know that whenever a candle opens, it first accumulates, then manipulates, and then distributes, right? You do not need daily bias for this, right? It is a completely mechanical system that you can follow. So once you have marked out the 5-minute or the 15-minute PD array, you want to drop down to 1 minute time frame. And over here you can see that we manipulated to the upside inside the higher time frame PD array or a 5-minute fair value gap. And then this is the most important thing. We need to see SMT divergence around the PD array. So if we go into the higher time frame PD array, so let's say that you're looking at gold futures here, right? Where gold creates a higher high, higher low, and then a higher high. But for gold, the correlating pair is, or asset is silver, okay? And if you're trading NQ, then the correlating asset is ES or US 30 or Dow Jones, right? We don't want to use the US 30 because that is CFD, so Dow Jones, right? So gold creates a higher high, higher low, higher high, but silver, on the other hand, fails to create another higher high, right? Now that is SMT divergence, right? So let's just do that. So once we have SMT divergence, we need to confirm that SMT divergence, right? So to do that, what we are looking for is change in the state of delivery. Now, what is CISD or change in the state of delivery? It is when you see consecutive bullish candles in this leg from this low to this high, right? I want to see price close below all these consecutive bullish candles or a singular bullish candle. So if they're like 1, 2, 3, 4, 5 bullish candles consecutive, I want to see price close below those candles. But if you have like 1, 2 bullish candles, then a bearish candle, and then another bullish candle, then I want to see price close below that singular bullish candle, okay? So SMT inside a higher time frame PD array, we have the 10 a.m. open, right? And ideally, you want to be sellers above the 10 a.m. open, right? And you want to be buyers below the 10 a.m. open. When price is above the 10 a.m. open, it is considered to be in a premium, right? And if price is below the 10 a.m. open, it is considered to be in a discount. So good buys can form below the 10 a.m. open, and good sells can form above the 10 a.m. open. Now, once we get SMT, we are coming off from a higher time frame PD array, right? And we have SMT, and if we get change in the state of delivery on the 1 minute time frame, and SMT also on the 1 minute time frame inside a 5 minute fair value gap, right? Now the wick pot is done over here. So this wick over here, that is confirmed that we are going to distribute lower. Now the final piece to the puzzle is our target zones. Where can we take our profits? And to do that, we use standard deviation. So go over here and choose fib retracement, right? And you want to use your fib from the last high that was formed to the last low that was formed before a market structure shift. So that is the last high and that is the last low. Now you want to make sure you want to copy these settings out. So if you have -2, -2.5, 0, -4, and 0.5. Now 0.5 is not really needed, so let's disable that. So -2 is where you should look to close out your entire position, okay? And if price is above the -2, what you can do is also add in another position, right? Scale in here, and then you can target the -2 and -2.5 level. But if there is a very solid like sell side liquidity near the -4, which is too obvious, then you can basically target those equal lows as well, right? So pretty simple, guys. This is how I trade a 10 a.m. 4-hour candle power of 3, and I promise you don't need anything else if you trade this model alone. Now I know a lot of people have preferences. Some people do not want to trade the power of 3. That is why I have so many variations of power of 3 on my channel that basically simplify this model, right? Now if you watch any of my videos, they're all the same, just different variations of power of 3. Okay, so if I invert the chart over, this is pretty much how it would look like as a bullish example. So let's turn the candle to green here, right? 10 a.m. open, right? And then we have, let's say, a bullish 5-minute or 15-minute fair value gap or an auto block. Price taps into it. We have the opening price. After open, price goes down, manipulates into a higher time frame PD array. We get SMT within or around the PD array, right? And then we get change in the state of delivery. We take our first entry. You can take a second entry as well if we are below the -2. And pretty much we target the -2 and -2.5. Or if there's a very clear buy side liquidity, that's what we target. Now that we have understood the strategy, let me give you guys some examples. All right, guys, so here is example number 1. And I'm looking at gold. And on the right, I have silver to look for SMTs. So this is the 10 a.m. 4-hour candle. So I want to mark out the opening price of this candle, and let's then drop down to 5-minute to mark out the PD arrays, and let's see what exactly happened with this candle, right? So if I go on to the 5-minute, right, this is the opening price of the 10 a.m. 4-hour candle, right? And just below it, we have a fair value gap. Now, you could also say that we have like an auto block here. So over here, you can see that we have this 5-minute auto block. But I want to mark out the fair value gap. Now, what I want to do is go here, and I want to drop down to 1-minute time frame to frame my trade. So right here, if I look closely, and if you look closely, is that we had this low. So this low over here, you can see that on gold, we couldn't take out this low, but on silver, we took out that exact low. So you can see that we swept that low. Now that is your SMT. But to confirm that SMT, what we need is a change in the state of delivery. So you can see we have consecutive 3 bearish candles. 1, 2, 3. So we need to see price close above the body of the first candle out of all of these 3. And that would confirm change in the state of delivery. Now, if the price is very close near this auto block, right? You can take a market order entry and you can put your stop somewhere around here. Now, if the candle closed somewhere around here, then you would wait for a retest of this auto block to get a good entry. So now we have this pattern, right? So now you would be in a long position. You would take a long at the close of this candle, put your stop here. And for our take profit level, what we can do is use our standard deviation from the last low that was formed to the last high that was formed before a market structure shift, or in this case, a change in a state of delivery, right? So you can see over here, what we have is -2 and -2.5 rushing around this area. So right off the go, you can see that we have these very clean equal highs. Now this could have been your target. Honestly, if it were up to me, I would take my profits here, but you could have held till -2 as well. And this would have given you 1 to 3 risk reward ratio. So 5-minute fair value gap, mark out the opening price dips below it, goes into the 5-minute fair value gap. We have SMT on the 1 minute with silver, we get change in a state of delivery, and that was absolutely beautiful distribution to the upside. Let's move on to the next example. All right, so here is example number 2, looking at NQ, and on the right I have ES. So this is the 10 a.m. 4-hour candle. So let's see what happened exactly in this candle and how you would have taken a trade. So let's mark out the opening price. Now let's drop down to 15-minute time frame, and this is the opening price. And as you can see, that we have a clear 15-minute fair value gap around this area, right? Now over here you can clearly see that we got a SMT divergence, right? So let's just drop down to 1-minute time frame. Let's go right around here. So price is inside the 15-minute fair value gap, and as you can see, that price took out the low on NQ, but on ES we failed to take out that low. So that is your SMT divergence. Now to confirm that, what we need is a change in the state of delivery, right? So we have this one down close candle. So if you close above the body of this candle, that is your change in a state of delivery. Now you could have entered right away, or you could have entered off of this 1-minute fair value gap. So this would have been your entry. And for a standard deviation, we use it from the last low to the last high, right? From this low to this fractal high. And you can see that we're getting -2 and -2.5 around this area. So you could have targeted this, or you could have gone and targeted the opening price, because that is a good magnet for price as well. So around here, or you could have even targeted this high over here around this area, and this would have given you at least 1 to 2 around this area. So let's move on to the next example now. All right, guys, so here is the last example, looking at gold, and on the right I have silver. So you can see right off the get-go that we have a 4-hour fair value gap, but also to make it better, you can see this is the 10 a.m. candle. So first thing first, we mark out the opening price as soon as this candle opens, right? And then let's drop down to 15-minute time frame. With that in mind that we are already inside the 4-hour fair value gap, you can also see that we have this breaker block around this area, and price taps into that zone as well. Now let's drop down to 1-minute time frame to see how you would have entered around this area. So we have the opening price around this area, and price goes up and taps into the breaker block. But also look at the silver, we have this high, and price couldn't take out that high on the silver, but on gold we have taken out that high. And most importantly, we are coming off from a PD array. And next step is that we have to wait for change in a state of delivery. So you can see in this case we have 1, 2, 3, 4, 5 consecutive bullish candles, right? So you want to wait for price to close below these candles, right? Below the body of this. Now you want to be seller above the opening price, okay? So this is the opening price. Look here, we have unfilled fair value gap. Now this could be your entry zone, right? Because you do not want to be a seller below the opening price. You want to always sell above the opening price, because that is considered to be in a premium. Now you can see that price pushed down. So let's see if it hit the standard deviation projection. So using like that, and I'm not sure if it hit that. Let's just go to 5-minute time frame, see if it hit the standard deviation. I'm not sure if it hit that, to be honest. And sometimes price will not hit that level because we have already got such a huge move. It is very unlikely that price will give you that standard deviation target, right? However, what I like to do sometimes is when we have a very big leg for our target, so over here, right? And let's just do this. So instead of using it with the wick, I can use it with the body, okay? So over here we have the last high to the last low, but instead of using this big huge wick, I use the body, and then that, I hope that it hit, yep. So it hit the perfect -2 and -2.5. So beautiful, guys. As you can see, it is very mechanical, very easy to follow. You're catching expansion moves with high accuracy, and that's what I'm all about, guys. I love to teach you guys the simplest way to trade, and you know, I've helped so many people with my free videos. They're funded, they're getting consistent payouts, which is crazy. So yeah, that would be it. Happy holidays, happy Christmas. I'll see you guys in the next one.